Everyone's there in waiting in the lobby has entered the chat, entered the conversation. So, good morning, everyone. I would like to introduce Mr. Mohammad Asjid Hayat here from Palm Ventures. We are thrilled to welcome Asjid, venture partner at Palm Ventures, to today's exclusive AMA session. Palm Ventures is a prominent early stage VC firm focused on backing B2B and fintech startups across emerging markets with a strong presence in the MENA region. The firm brings capital, deep operational expertise, and a strategic global network to support promising founders on their journey from idea to scale. As we have Asjit, he brings a wealth of experience working closely with founders to shape go-to-market strategies, unlock funding opportunities, and build scalable businesses. His role at Palm Ventures places him at the intersection of innovation and investment, supporting breakthrough ideas with actionable insights. We'll now hand it over to Asjit to kick off the session with a short presentation. He'll share his perspective on the current startup landscape, investment trends in MENA region, and how founders can position themselves from early stage success. Take it away, Mohammed.
Hi, Harsh. Thank you very much. I'm going to share my screen and do a quick presentation, but I want this to be interactive, so I'll just do a quick presentation and then open the floor for questions.
Yes, absolutely. Just to give everyone a brief, uh, once the presentation is done, we'll open the floor for questions. So you can put your questions in the chat or feel free to turn on your camera and unmute your mic and ask Asjit your questions personally.
Okay, so start off with my name is Asjid and I represent Palm Ventures. Palm Ventures is, let me just actually make this a full screen.
Yes, that'll be, yeah.
So Palm Ventures, as Harsh mentioned, is MENA focused fund. We are headquartered in Riyadh, and the reason why we are MENA focused is the growth potential in the region and what's happening in the region. Plus, there's expectation around the region that by 2030 we will have 45 unicorns, unlocking a value of $100 billion. So that's a huge potential when you compare it to the rest of the world. And we specialize in early stage VC tech investments. We have so far made over 21 investments in the past 4 years. We use a few vehicles to do that. So we have done some investment directly in MENA region. Then we have a partnership through a Silicon VC fund where we operate a fund in Silicon Valley to invest in global opportunities. Our approach is fast-paced to early stage investors. We like to close deals very quickly. And to capture these deals, in January, we launched our $30 million fund. So this is kind of the landscape and the background. So I want to talk a bit about the journey of Palm Ventures itself as well, to kind of give founders understanding how VCs are created as well. So in our case, we were established in 2014 as a business unit within a consulting firm in Saudi, and where we're supporting the entrepreneurship ecosystem in Saudi Arabia and doing some commercialization projects for the government as well. In 2020, we transitioned into a standalone company focusing only on tech startups investments. And this evolution brought together 40 plus investors and advisors. So this is slightly different structure to a typical VC fund. So we have a mothership or a whole co, if you want to call it that way, which has 40 plus investors and advisors on it, on the cap table of it, which opens our kind of network much bigger than a normal VC would have. So these investors are CEOs of leading corporations, serial entrepreneurs, and investment experts themselves as well. So we leverage a lot of industry experience through them. Our mission is to build a top-tier venture capital firm. And as I said, we launched our Fund 1, focused on MENA earlier this year. We are committed to being a force for good and empower transformative startups while delivering exceptional value to investors, society, and the region. So money is not the only goal. That's kind of like what I want to highlight here. Our investments so far in MENA, we have 12 investments. So the first two layers that you see, those are our investments in MENA region. And the bottom four startups, those are our global investments through our Silicon Valley partnership. Those four investments are purely AI-based investments, and we started them in 22 before the AI kind of became the buzzword and everyone's kind of brought it on table. One of the ones, like, I mean, you would have heard a few of these startups in the region, like Erad is doing very well, Nearpay to highlight as well. Rain, again, it's a very famous startup. The bottom four, I think people would have less heard of, but these startups are doing very well in on the global stage. Moving on, I wanted to kind of like highlight how do we source our deals and how so we play in the ecosystem. We have a lot of partnerships within the ecosystem. We speak to other VCs regularly and share deals with them as well. And highlighting the my previous point about the 40 investors plus advisors that we have on Palm Ventures mothership, they bring us a lot of deals. So out of our 21 deals altogether, 15 of them were referrals and six of them were from existing relationships. So this kind of would highlight to you how VCs typically would source deals. And then we also do co-investments. So a lot of times VCs would come to us and say that we have invested in this startup and we want you to come on board. And then we will run our process, and that kind of opens up that as well. And this business connections thing that I've already highlighted is the value that we unlock from our own shareholders. Moving on, I'm going to skim through this and leave it for you guys to ask me a lot of questions. Moving on, just kind of like I want to touch briefly on the what a typical selection process or criteria looks like for early stage. So typically when we'll get a pitch deck, we will do an initial assessment that would typically be 5 to 30 minutes. Can seem harsh, but it is very easy to quickly filter out some of the pitch decks that are either out of our thesis or we do not believe in the idea. So it's a very quick thing, and we just kind of like take the initial impression, look at the elevator pitch, founder's background, market, like a quick skim through on that. If we like something, then we spend more time on it. So we do a detailed evaluation. Typically, we would want to spend 2 to 3 hours, but that's never happened. It's much longer time than that. And this is where we are trying to figure out exactly what the idea is, understand it deeper, understand the market, understand the founders' team, and this would usually happen after initial call with the founder. So give the chance to the founder to present their case and make us understand what their journey is, and then we'll go into that. Once we've gone through all of that, then we start looking at the valuation of things. So we run our own valuation process. Typically, we will look at the VC model of valuation. Sometimes it's also on the DCF and comparative models as well. Once we have done all of that, then we'll prepare our investment memo. And during that process, there's a lot of times there's true and fro to the founder trying to figure it out exactly whether we have got enough meat into the investment memo. Sometimes during that process, when you're building the investment memo, you lose conviction in the idea, and you have to pause at that time. If everything goes well, we'll take it to the investment committee, present the whole investment memo and kind of like the whole our strategy on the deal, what value we can bring to the table, and how we think the journey of the startup would be across our fund life, and how we can exit our investment. Once all of that is gone through, there could be two ways. The investment committee says, no, this is not something we want to invest in, or this actually three ways, or they raise some questions and we have to go back to the founders to kind of bring in additional kind of information and present it again to the investment committee, or the third final one is approval. If it goes down to approval, at that point, then we start doing our due diligence. So the due diligence typically would involve around commercial due diligence, technical due diligence, legal, key employee due diligence, and key customer suppliers. So a lot of times, all of this is with a lot of caveat, because a lot of times, like if you're looking at investing in a very early stage startup, they might not even have a customer or a supplier. So at that moment, like some of these things can just move as they, depending on the type of the deal or the stage of the deal that we are looking at. So this is what I wanted to present, and I wanted to leave it open for you guys to just ask me questions, and I can walk you through any kind of process or any questions you have. So please feel free.
Fantastic. Thank you so much, Asjid. Thank you for those valuable insights. Let's move on now to the AMA portion of today's session. Attendees, please feel free to drop your questions in the chat. If you'd like to ask any question live, just raise your hand and we'll unmute your mic. We have two questions, Asjid. One from Nathalie and one from Arun has raised his hand. So let's first address Nathalie's question as he's put it in the chat. What is the best way for a startup to pitch to Palm Ventures?
Okay, so there are multiple ways that that can happen. If you want me to figure out the best way, then I would say become friends with me, and I'll come with the referral. That would be the easiest way or the best way. Warm leads are always better than cold outreach. So we do look at the deals come through LinkedIn, deals come through email, deals come through other network as well. So they all happen, but they always end up in a lower kind of like priority thing. Just to kind of give an overview, I have in my pipeline right now closer to 400 deals that I have to go through. So if I have to go through 400 deals, I have to prioritize the one which, for instance, if Natalie has sent me something, that is always going to be on the top side of things, because
Understood.
Natalie would have looked at herself and she would know what sort of deals Palm Ventures do. So if she's recommending something, I would expect that to kind of fall in line with our thesis and be a good deal. So it's like incubation center, accelerators, when they reach out, they always have a better kind of like deal flow. The other thing I would say is to startups who do not have access to either referral based approach or through accelerator or incubator, what they should do is attend a lot of networking events. And at
Absolutely.
that point, network with the VCs so that they can pitch. Because a lot of it is the at early stage, the importance of the founder and their team is probably the highest compared to the rest of the other metrics. If the founder is solid, even if the idea is not fully developed, we would expect the founder to be able to navigate that journey themselves. So
Understood.
that always helps. So I would recommend attend, like you guys do a lot of events.
Absolutely.
So that is tends to be like a good opportunity for startups to at least introduce themselves. And one other thing that I would like to highlight here is do I mean, it's always kind of like an egg and chicken situation, but
Mhm.
try to network with VCs before you are raising funds.
Got it.
Don't only start networking when you have already decided you are raising funds and you have your journey. I mean, it can happen. I'm not saying don't ever do it, but if you are prepared early on, you will a lot of time get so much insight from VCs
Correct.
early on, so you can design your pitch deck and your pitch based on that. So I think that always helps if you are prepared before you are entering the fundraise process.
Absolutely. To treat it more like a process than just a question. Wonderful. Natalie, I hope your question is answered. Next up, we have Arun raising his hand. Post that, we'll head to Nizam's question, but first, we'll go ahead with Arun.
Yeah. Hi, Ajit. So this is Arun, CEO of XWall, Ajit. So we are into physical gaming. I think we met during our Pitch Fest happened
Yep.
last Feb.
Yep.
So my question is, so may I know your current fund and then your target segment. So nowadays, every sector is AI focused, right? So what's your the current fund, the status, and then what's your target segment, Ajit?
Okay. So we are sector agnostic, but we have preference for three verticals. And that preference always drives the priority as well. So our preference is for B2B, AI, and fintech. So
Mhm,
those are
mhm.
three segments that we prefer. Uh, in terms of everything, like now, as you said, is AI.
Yeah.
Uh, so you have to look at AI from the perspective of, is the AI core product
Mhm.
and the amount of value that AI is driving within the startup. That
Right.
can vary from one startup to the other, one idea to the other. Some has core a product which is based on AI. I mean, a thing that could not be done if AI wasn't there. So that's a core
Mhm.
AI product. But then there are some startups which use AI to optimize their like either
Right.
growth or kind of optimize the customer journey and all of that.
Mhm.
So that's kind of like the two different angles of looking at it, at least from my perspective. So core products are always better.
Mhm.
So like one of our portfolio company that I was showing earlier is Vistapath. So they are a medtech company. They are optimizing their whole biopsy process,
Mhm.
particularly grafting process within that.
Mhm.
And that process without AI could was pretty manual and could only be done manual.
True.
And because of AI, it can now the error differentiation or kind of if I could explain it in that terms, previously the human error part of it was 50%. So 50% of the samples that are taken in grafting process end up wrongly analyzed. And
Mhm.
with this AI technology, that has reduced to like 20%. So the error is
Mhm.
20% now. So that's a
Mhm.
huge value driven in a very core industry, which has very high risk by AI. So that
Right.
is kind of like a core product. So I don't know whether I've answered your. And one other thing
Right.
that I would say is we typically shy away from gaming.
Mhm.
And this is not to
EdTech,
say
EdTech,
that
what's your thought about EdTech
uh,
companies who are AI
uh,
first?
so the both of these verticals for us becomes a bit tricky,
Mhm.
and I'll explain why. So gaming,
Mhm.
I'm gonna be very frank, I don't understand it. It's a huge
Okay.
market. It's great. Like if I
Yeah.
can't add value, just me writing a check is not good enough. I need to understand the
Absolutely.
market. I need
Absolutely.
to add value to it. I need to bring something
True.
more than money on the table. And when
Mm-hmm.
I can't, so I need to be respectful of the founders as well. That like this is
Hang
not
on. Money is not a matter. It's all about how well,
exactly,
after raising it,
exactly.
how well. It's like a
Yeah,
marriage, right? So how
yeah,
well both
exactly.
the members they
Yeah.
can travel together.
Yeah, and
Got it.
also
Got it.
kind of the other side of things is that, and at no point, like this is something that I like to clarify, and I try to clarify in every kind of meeting that I have with founder.
Mm-hmm.
Uh, the alignment between the startup and the VC firm is very important. So
True.
if I say I am not investing in your startup, that doesn't mean your startup is not good or your idea is
Mm-hmm.
not good or I don't believe in you.
Mm-hmm.
There is so many different factors that a VC looks at before they
Mm-hmm.
make the call. So there is obviously the idea of the founder and the startup needs to be good and all of that. Let's say you bang
True.
on, everything is good, but my
Mm-hmm.
portfolio doesn't allow me. I have invested either
Mm-hmm.
in a company which is closely aligned to you, or my portfolio
Mm-hmm.
is too in a particular. So I'm trying to balance my own portfolio as well. that I can't go into the similar sector multiple times. I can't have similar stage multiple times. How much can I like balance that out? So there's a portfolio construction that happens behind the stage. So that can sometimes impact. Or also you could be great, but there is someone who is 5%, 2%, 10% better than you, who is picked at the same time. So in terms of the priority, you haven't made it. So there are multiple factors that kind of contribute to a VC's decision. So I always say that never take a VC's decision personally to the founders. That's very, very important part of the puzzle. And also, and this is something that it's never a permanent no. That's what I want to call. Like it might be a no at this stage. So maybe you're looking for a pre-seed investment, and I think, okay, I'm not ready to do the pre-seed investment for whatever reason. But maybe at seed stage, I have followed your journey, and at that point, I'm like, okay, no, Arun is doing really good. I think I should invest in this. So things change. And my advice to founders always build those bridges, always. Even if someone says, no, I don't like your idea. I mean, however, like kind of the feedback is, continue updating the VC, because that shows that, okay, you understand how VCs operate as well. Like, so there's a lot of those things. Like you can optimize your, because even as a founder, your journey is not to just raise a pre-seed. Your journey is not just to raise a seed. You should be looking at a long term. Yeah. And firstly on that the VC could come at any stage. The second is, if you build a good relationship, VC, even if they do not come in for whatever reason, which could be any of the ones that I said before, if you have built a good relationship, they can still open doors for you with other VCs. So it's always kind of like that. So I hope that answers.
Yes, of course. So what about EdTech? So whether your
okay, EdTech is something that we look into, but so far nothing for us has come to our attention that it's EdTech is a harder segment. It's a very, like, I think it's probably one of the hardest segment to crack, purely based on, and this is my personal opinion rather than Palm Ventures opinion, so please just take it as that. I wanted to caveat, I think there's a lot of innovation and disruption happening in EdTech that, for me to understand exactly where it will land, is becoming harder and harder. So what will be, I think the whole education sector is going to be the way we learn, what we learn, all of it is going to be disrupted. So how that will come out is something that I have not been able to map yet. And that makes this segment very tricky.
Cool. Got it. Probably I can elaborate probably when you're free about the same.
Yeah.
I can give a complete overview.
Yeah, no, 100%. I'm always open to learning more.
Cool. Thanks for answering.
Fantastic. And also perfectly put by Asjid that it's not only about the money, it's about the value and the journey that you all are going to go on together once the partnership is done. Fantastic.
Absolutely.
Let's move to the next question. Thanks so much, Arun. The next question is, once you have once you have shortlisted a startup after initial screening, what are some red flags that have stopped you from moving on forward, even when the team or the products look promising?
Okay. Team and the product looks promising. I mean, usually those are the red flags. So if I remove those red flags out of it, okay, then it's okay. Then I can only think about one other thing.
Market.
Of course, market. It's at that moment it's just market. That I don't have enough comfort over the market opportunity or market sizing or the stage that the market is at. Or I think that it's already very saturated. It's going to be very hard to come in the market. Although so a lot of these things is like there's a counter argument, which
Got it.
is market is never saturated. If your product is amazing, you can always disrupt any market. And I always take the example of Tesla. Although I'm not a huge fan of Tesla as a car, but I think if anyone can come and disrupt the automotive industry, then every founder should believe that they can disrupt any industry, but it all is dependent on their grit and their product.
Got it.
So if you have got those two things right, then you can disrupt any market. But market sizing is very important. How big is the market, and how you gonna the go-to-market strategy, whether you understand that. Because when you say that the founder looks promising, I am assuming that the founders figured out the go-to-market strategy. They have enough X factor about them that I feel that they are the strongest candidate to launch this product. Then it's become really about the market.
Mhm. So is it more like scalability concern or the penetration in the new market concern?
It can be both. It can
Got
be
it.
both. So for instance, let's put it this way. Someone comes into GCC market or the MENA market from outside the region, got a good CV, and like solid team, good candidates, understand their product very well. The product is designed very well, but they enter the GCC or MENA region, and that's across from the world, from whether you're coming from US, UK, East, West, wherever you're coming from, or North, South, wherever. You come in and you're like, okay, I'm going to take the whole of GCC or MENA market. My product is going to take that. Big misconception.
Big misconception.
GCC as a region or MENA as a region, each country has its own intricacies. Each country has different cultural intricacies. They are at different stages of them. Like Saudi is up and coming, massive market, huge population. UAE is smaller population, more developed in kind of the ecosystem. Egypt completely different. So there is like Qatar, smaller market, but again a different kind of approach. So there is a lot of intricacies in the region. So do you understand the region that well? Do you understand exactly what's happening in each of the region?
Got it.
I had a startup pitching to me, and they were talking about they're expanding big into Saudi, and they were going to expand into UAE from Saudi without understanding that the UAE, the segment that they were targeting, you can't tap that segment in UAE because it's owned by two or three players in the market, and they will never need to use their technology because these players are huge players and they
Yes.
have a good technology stack themselves. So just like a simple thing like that, but you will not understand it until you understand the region. So, and
Mhm.
also kind of the culture element, I think people forget how business is done in this region is very different to how US, UK, or more other regions do it. So it's a very relationship-based market. So be respectful of that. So if someone doesn't understand all those intricacies, then that can always become a red flag.
Yeah. So more than understanding the problem, you also need to understand the network and the market which is present
Yeah,
before
yeah,
putting out the solution. Okay,
yeah.
we have a question from Ahmad raised his hand, but before that we have a question also from Cheryl. That is, what is your outlook with regards to a hybrid model between edutech and fintech?
That's an interesting one. I would want to understand more about what actually the hybrid model looks like, but I think it's an interesting play. Uh, there are a few startups coming in this space in terms of the study now, pay later kind of market. So that's there. I don't know if this hybrid model you're referring to that. But there is so much that can happen when those two things match together. Payments, school payments are a big issue in the region. So even just solving that side of things can always be a good play. So yeah, I don't know if I've answered the question. I think Cheryl raised hand as well.
Yeah, Cheryl,
Yes.
please go ahead.
Hi, good morning. Thank you so much. Well, the hybrid model is basically educating kids on financial literacy. I
Okay.
think there is a major gap as far as understanding that particular element is concerned. So
100%.
coming from the banking industry myself, I've been in the banking industry for close to 2 decades in the UAE, and I've seen this problem happening firsthand. I've seen banks not investing into this particular segment because they would want to focus on priority customers and private banking customers in order to get more bang for their buck. So I feel for conventional banks, I see a huge gap over here where stickiness is an issue, brand loyalty is an issue, and basically honing future leaders as far as clients are concerned. So that's where I found my segment. Hence, the hybrid between edutech and fintech. So it
Okay.
educates them and it rewards them with every financial milestone. Yeah, thank you.
Cheryl, I would definitely want to understand this more deeper. So definitely reach out and we can have a conversation.
Sure.
Because there are two parts to it. There is the which you can classify as a finance education, where people understand how to manage money and kind of like how investing side of things work and all optimizing their savings and that kind of thing. That's an separate segment. And then there is the segment which I think there was a company or startup, if you want to call it, uh, called Henry,
Yes,
which used to give cards to teenagers, I think, or even
yes,
kids to kind of help parents guide them through the journey of how do they save their pocket money and how do they invest that. So that kind of a thing was there as well. So I'm not sure where the
correct.
whole product is, but I'm
It's very close.
happy to have kind of like a chat. Please reach out and then we can have a
Sure.
discussion on this.
Great. Thank you so much for that.
You're welcome.
Wonderful. Thank you, Cheryl. Before moving to Ahmed, thank you, Ahmed, for your patience. But we have one more question which had come before you. So we'd like to address that. That is from Dania. Like, I would like to ask how Palm Ventures assesses startups working in emerging sectors like blockchain or decentralized finance, that is DeFi.
Okay, I would love to sit here and say that I'm an expert in doing that. I'm not. What our strategy is, there are a lot of fields because when you're sector agnostic, there are a lot of fields that you don't understand. And I don't like to pretend I do. I come from a banking consulting background. So those are the fields that I understand more. There are certain segments that in my previous life, I worked with startups a lot, so I understand more deeper. There's certain I don't. So blockchain and DeFi. So our strategy is with areas which are very tech heavy, because I don't come from technology background. We have venture partners who come into the kind of play at that moment in time. So if we hear a pitch which we think is good, we want to understand the technology more. What we'll do is we'll bring in our venture partners who are technologically experts in technology. So we have Salman Butt as a venture partner who was a co-founder in Salah. We have Dr. Omar Bakr, he's a PhD from MIT and he has his own startups and his own VC fund. So we bring them in to kind of evaluate the startups in those segments where it's very technologically heavy. So I hope that has answered the question.
Perfect. Moving on to the next one, Ahmed, thank you for your patience. You can go ahead and unmute your mic and ask your question.
Oh, thank you so much for that. Thanks, Mohammed, for giving a lot of insights. You have answered many of the doubts what I have. But just to give a brief, I'm a founder of WordWorks AI. We focus on collection and marketing, automated calls for banking segment in India. We are moving towards the Middle East as well. We are working with Tamara and so on. My question is that some of the companies who have been successful as a startup in few months in India and who want to penetrate the market where margins can be much more better than India, do you support such ventures as well, or is it something like you're restricted within Middle East region only?
Okay, so a couple of things on. So one of the things for us is because So how VC funds work is they have to operate within their thesis, because that's the thesis that they have gone out in the market and raised funds from LPs to bring on the table. So you're restricted by your thesis, legally you're restricted. So we are restricted to do MENA investments. We have an opportunistic, which is the US part of it, a small kind of segment where we do invest into the US market, or but otherwise we are restricted by MENA. And when we say MENA, the startup needs to be based out of MENA, headquartered in MENA. The team should be here. And then that's one thing. The other thing is I'll pull back onto something that I discussed early. So when you come from outside the region, it makes it harder for us to evaluate whether you understand the market. It increases our risk. That, okay, would you be able to work in this market? Would you be able to expand within this region, given the intricacies? UAE predominantly English speaking, Saudi predominantly Arabic speaking. Would you be able to do that? Would your product be cater to that? And then it's the different dialects, especially when you're talking about AI-based conversational elements, then different dialects, different conversational styles. So those become more trickier unless your product is based as purely for Arabic. So then you can have different modulars, different dialects. You understand it. The core proposition is Arabic first. Then it's less risky, but also I think that kind of answers the because at this stage, at an early stage, we are taking a lot of risk anyways. So we are trying to minimize those risks from all the other kind of element. So it's kind of like balancing that side of things.
So you look at the founders basically who have experience in the Middle East region, who can take the technology from other regions and expand, who understand the culture. That kind of summarizes.
I mean,
tech stack, obviously.
No. I don't want to okay. So it's never that simple. That's the problem. Right. It's never that simple. I can't give you a black and white script of this is what I want in a founder. This is what I want in an idea. It's always a very gray area. And it's always at early stages, a lot of, again, coming back to it's a lot of ambiguity. It's a lot of risk. And we understand that. And that's why we're in a business of early stage investments. Otherwise, we'll do Series C, Series D to kind of like find all of those things. So there are a lot of factors, and you're always trying to balance one with the other. So, yeah, it's a very subjective.
Thank you so much.
I'm not trying to be ambiguous about it, but it is in reality is like that. There's always so many things. There's so many moving parts. They could be an amazing founder, but you don't like the idea. But they could be amazing founder, good idea, but there's no market for it, you think. And then there's multiple. And there have been times that you really like something, but you can't convince the investment committee that's a good idea. So there's so many different things that move around.
Absolutely. Thank you for your input. Thank you,
Ahmed.
Thank you so much, Ahmed. Following to this question, I have one more sub question to this. Is like, what advice would you give to a startup looking to expand from MENA to global?
That's a good question. Okay, so that is a very hard one because it depends on what type of startup they are. Firstly, okay, if you have expanded well in MENA, then you are already doing very well. Because that's given market sizing in MENA for most of the ideas should be big enough. When we're talking about MENA, we're talking about UAE, we're talking about Oman, we're talking about Saudi, huge market Saudi, we're talking about Egypt. So there's the Qatar, so these Bahrain, Kuwait, like you can name these countries, and all of these markets are in their own place, have something to offer. So if you have done all of this, so that means you definitely have got product market fit, you have good understanding of how to go to market, so you will have figured out your go-to-market strategy in the region, and now you want to expand globally. You need to understand then when you're looking at globally, where do you want to compete? Are you going in Europe? Again, if you're going into Europe, then Western Europe is very different to Central or Eastern Europe. So you need to understand that side of things. And then there's a language barrier. Like you can't launch an English product in France. I mean, you can, but it's going to be tricky. It's not going to work. Majority of people speak French and they don't like, so they use products in French. And similarly, if you want to do it in Germany, it's a different language. So you need to change your product or kind of figure out exactly what the niche of that market is and the relevance of your product is. So as long as you are able to conform to those things, then that's fine. The other thing usually I would say is easier to do is either find channel partners on those markets and distribute your products through channel partners if it's a B2B product. If it's a B2C, then I'm the wrong person to answer the question anyways. Or hire someone from that market who understands that market very well to kind of circumvent or kind of offset your lack of understanding of that market. So,
an
but I would
industry
say,
expert or a region expert, maybe.
yeah. I would assume you are an industry expert by then because you have scaled within MENA, so you understand your industry really well. So you need someone who is region expert or the market expert, however you want to put it.
Wonderful. Thank you so much.
Just before you close off, there are certain things that I wanted to kind of like highlight in terms of things that I think there's all the things that founders should do. There's things that founders shouldn't do. One is don't send blanket emails. It puts you off very negatively, which by what I mean by blanket emails is you're sending the same email to 100 VCs.
It's not
and when you are it's not personalized, and when you are doing that, you're spelling like I have received emails on my inbox which don't even have my name on it. It has a John or James on it. So at that moment, I know this person has been sending emails to a lot and it's just a copy paste. It's just going. And one thing that you can do to optimize your fundraise journey is to figure out exactly which VCs operate in your segment. And like, for instance, even if we are sector agnostic, but we have some verticals which we prefer. They are on our website. So you have more chances if you were to go for a VC that specializes in your vertical. And also with that, you can also look at their past portfolio. That, okay, do they invest in, like, for instance, blockchain or DeFi? How much of that is part of their portfolio? Do they like look into that? So there's always that kind of angle. And the other pet peeve that I have, please do not make mistakes in spelling mistakes in your email.
Correct.
That shows lack of attention to detail from the founder. And that skill is very important if you want to build something up. So
absolutely. Correct. Thank you so much. Thank you so much, Asjid. If we have any last question, we are willing to wait for 5 more minutes. Please, anyone in the audience, if you have one more question for Asjid, we are open for one last question.
I can go ahead, Ash. Yeah, Ajit. So once after the fund, so how well you are just helping the budding entrepreneurs, Ajit? Once after the investment.
Sorry, come again. You're talking about like a post the investments.
Yes.
What do we do?
You are helping the entrepreneurs in scaling across MENA. So they might be good in the UAE alone. So how well you're just helping them?
Okay, so this is the Palm Venture strategy. So if I am investing in a startup, I have already done enough work on it in terms of trusting you to know your product better than I do. If I don't have that faith in you that you understand your product and your market, I will not write the check. So if I've written the check, I already believe in you. I know that you have the technical expertise. You understand the market really well. So you are
Mhm.
at a better place than I am. So I'm not gonna
Yeah,
get
of course.
operationally involved. So we are
Right.
very hands off from that angle. We want you to drive your startup. It's your baby.
True.
You need to run with it.
Absolutely.
Where we come in terms of support is if you ever reach a problem or an issue,
Mhm.
we should be the first 2 or 3 people that you call so that we can
Mhm.
open our network and resolve that for
Yeah,
you.
of
So,
course.
so
The network
that's
add values, right?
yeah. So
Yeah.
that's how we do it. We open our network and we bring that on the table. That's the first value. Second value is that we are very connected to other VCs. So if we are
Mhm.
writing a check, then we like to support you when you are speaking to the other VCs. That doesn't mean that I will
Right.
run your fundraise instead of you, but that's
Uh-huh.
more kind of like we are there to support you in terms of, okay, these speak to these VCs, speak to this person in this VC, that kind of
Mhm.
angle. So we do those two-pronged approach in terms of creating value. But the
True.
first thing is it's the founder's startup, it's their responsibility to run it.
100%.
Yeah.
So the
And we
entrepreneur,
don't
they should
like to
lead it.
kind of like,
Yeah.
this is like a huge thing that a lot of time VCs direct how the startup should go. We don't do
No.
that. We are
Right.
very hands because the thing is, for
That's
me,
not
if
good
I
for
need to,
startup, actually.
I'm not gonna come with that opinion whether it's good for the startup or not good for the
Mhm.
startup. I think when I've written a check, I've given my confidence that I believe in you. So I need to, at
Absolutely.
that point, without like stay quiet after that, because if
Absolutely.
I need to sometimes be like sometimes it's tricky. Sometimes you know exactly what the founder is making the mistake, and you just
Mhm.
stay quiet.
Right.
Sometimes being quiet is a better skill than chatting. After speaking for an hour, I can't say that, but yeah, so sometimes staying quiet is more important and let
Right.
things go because it's a journey. Even if the founder is making a mistake, sometimes it's better for them to make that mistake early on because it's not that
Mhm.
costly and it'll be a learning
Right.
experience for them. So yeah.
Cool. Thanks. Thanks.
Absolutely. Thank you so much, everyone. I am putting a feedback form for today's session. So once you're done, please fill the feedback form for today's session. I think we'll conclude here today. Thank you so much, Asjid, for your valuable insights, and we hope to have this partnership going on in the future.
Thank you very
Thank you.
much for having me, and
Thank you,
thank you
everyone.
everyone.
Yeah.
I'm putting the
Thanks,
feedback
everyone.
form. Everyone, please fill the form. Have a great day. Thank you.
Cool. Thank you.